Good afternoon, ladies and gentlemen. I want to expand my thoughts with regards to the market. I'm looking at the S&P 500 E-mini contract. This is the futures. This is the same chart that I posted in the weekly 5 on Sunday, and I want to expand on it. But to recap real quick, basically I had said that this is a three-wave structure to the upside. This means it is a counter trend move. It is a bear market rally. This pattern is clear cut. This is a high confidence pattern. I've seen it over and over again. This is a correction. There is no doubt about it. I want to expand on that by showing you a parallel channel that has been providing support, resistance, excuse me. We do that by taking a trend line from the very top of the market on May 19th through July 20, which is the secondary top, and just project that down to the bottom part here of this entire consolidation, which comes in on July 5th. And you can see the rally from the crash lows attempted to retest the underside of this channel. This is a channeling technique that shows you support and resistance. In this case, it is showing resistance. Additionally, to compound this area here, I'm going to go ahead and draw very common, the typical Fibonacci retracement levels from the very top to the bottom of the crash. So we'll do that as such. And you can see the rally precisely retraced to the 61.8 Fibonacci retracement level. This tells me that the market is trading very technical. So paying attention to technicals is more important now than ever before. This is the most common stopping point for second waves and is a very common stopping point for corrections. So additionally, I had also stated that the decline from the high was impulsive, and there is only one corrective pattern in the Elliott wave arsenal that starts with an impulse wave. But I guess my point is their corrections do not terminate with a single impulse wave. Or let me rephrase that. A correction cannot encompass a single impulse wave. If you see a single impulse wave from a starting point, this means that this is only part of a larger pattern. So it's very possible that we are going to test the August lows. In fact, I'm sort of counting on it, to be honest with you. So it's possible that from the highs of May 19th through August 24, this was only wave A. This three-wave counter trend move was wave B, and we are now stair-stepping our way lower in wave C. This is one possibility. And the evidence so far suggests that this is the case because the decline from this high is impulsive. So once again, we do take things one step at a time. However, this is telling us that the trend is to the downside. So I do favor shorts or being net short. If you're an investor and you're not necessarily a trader, you definitely want to be in strength. Even if the market sells off, I'm not telling you to liquidate your long-term positions, but you definitely want to, lighten any stocks that are underperformers. You only want to remain in strength. That way, you can be defensive towards the decline. So one way to look at it is use this August 27th high as a barometer of strength. If a stock has not been able to make a new leg above this high, then it is, in my view, a weak and underperforming stock. I will show you some examples of that. Let's go over to Wendy's. You can see here from the crash lows of August 24, this stock has moved net sideways. This means this stock is immediately vulnerable to test a new low. Okay, you can see it did not make a new leg up. Another one is Pentair. In fact, I have the chart here. This is the chart because we have an active trade on this. This is the August 24 low. You can see this stock failed to make a new high past the August 27th highs. In fact, this has already broken to new lows, which is why we are short. We want to be short weak names. You don't necessarily want to be short strong names. You don't want to pick tops or bottoms. Just go with what's working. If a stock is weak, short it. If a stock is strong, buy it. Keeping things simple. Let me show you some examples of strength. No surprise, Nike. Not only has this surpassed the August 28th, 27th high, but is testing all-time highs. Under Armour is another one. A potential trade that I'm looking forward to in the next few days to potential weeks is in Kite from the August 24 low. Not only do we have a rally, but it is an impulse wave. Okay, this is what I'm looking for as an Elliottician. So now I'm looking for a 3-wave setback in order to get long for a new high. Okay, so this is, you definitely want to be in strength. I prefer to be net short. So this is pretty much what I'm looking at, guys, for now. So I'll leave it there. If you guys have any questions, you guys know where to reach me. Good luck.